Welcome to the London Outlook for Wednesday, the 20th of November 2023. Starting off with the economic calendar, we have some significant red folder GBP news at the Frankfurt Open, which is CPI. I wouldn't allow this news to trigger any entries, and I'd actually wait for the news to be released and then fade the news release accordingly based on the news release. In terms of the New York session, we do have red folder news. However, this isn't as significant as the GBP news, and we can be in trade positions and even allow this this news release to trigger an entry. However, we will have to manage any open positions in accordance with what the news release is telling us. Moving on to the 4-hour chart for GBPUSD, like I explained in previous outlooks, we are still in the confirmed bullish trend, with the current target being this 4-8 swing leg. We haven't validated any pullback phase leg OBs. These were buy to sell wick OBs and are not significant enough to actually validate the pullback phase, which would then mean that the target for the pullback phase is this pro trend extreme. However, what we can see is that there is scope for longs. However, we do need backing for the pro trend primary leg. In this regard, there wasn't any to the left. As you can see here, these buy to sell wicks were effectively not valid because they were not supply demand interactions, simply because this wick is higher than this, and thus is an indication that it's not actually reacting to this OB. If we look at this, you can see that we have this supply level, and we do indeed have the buy to sell wicks reacting to this level, which is why this was a valid level to trade from. However, moving on to yesterday, we essentially identified valid substructure. The substructure OB was then, whilst this is a CPP and we can't trade it, it is a chalk level. And once we do get that 4-hour body break, we can validate the pro trend primary leg on the 4H, which then essentially gives us scope for trading today. And if I move on to the 15-minute, what you can see is that effectively anything in this leg is likely viable, simply for the fact that even if supply takes control, there's no reason for supply, or there's no 4H backing for why supply should be taking control. Given this information, we can identify valid levels to trade from within this area based on two premises. Premise 1 is actually aligning the fib to the previous high and low of the day, and then finding a level within that to consider trading. If there wasn't GBP news, I'd have this trade open as trade option 1, and then considering this option as trade option 2 with a stop loss below this level. However, this trade is dormant for now, I'd say, not invalid but dormant, purely for the fact that we have to wait for this British pound inflation news, and then we can make new trade decisions from that point onwards. Our third option for getting longs is actually for price to somewhat turn around from one of these levels and essentially make a what I would call a secondary leg, although it wouldn't be necessarily a secondary leg, purely for the fact that we actually still within this pro trend primary leg. So, having said that, and the fact that it doesn't really make sense to validate secondary legs, our options for actually getting into an entry is somewhat limited to finding an entry within this primary leg, and not necessarily finding a new OB or a new fib based on current high and lows of the days, purely for the fact that we actually I guess we actually don't necessarily have reason to develop a secondary leg, because like I said, there is no validation, or there is no validation points for finding shorts and validating a shorts primary or secondary leg, which would invalidate this primary leg. For that reason, whatever trades you do take, it should be based on what's to the left rather than what is built to the right, because what is likely to happen is what will build on the right is probably going to be liquidity for a level somewhere in here or somewhere in here. But yeah, remember the ultimate target is the ERL swing high. I think at the point of the pro-trend primary leg extension point is where you can then anchor yourself to actually the current highs and lows of the days, because then you are indeed back in the primary leg. As a result of what I just said, I think it's a good idea to put a level right here and to actually note that the pro-trend primary leg is extending. I do want to highlight the fact that the only reason we are able to trade within this primary leg is because the 4H has validated it, and it's not because we reacted to a 4H level and came up. So that's just a key detail to note. In situations where you don't have a reaction to a 4H OP, your next best option is to wait for a chalk level, which will create this pro-trend primary leg on the 4H, and then obviously because it's a primary leg, the treatment of the primary leg is the same on any time frame. Even if we go on to the 5-minute, you'd look at similar levels. Yeah, so that's essentially my outlook. My bias is significantly biased to the long side, and I don't see any way to actually short, at least not for the foreseeable future, but we'll take it a day at a time and continue from there. We'll chat again for the New York outlook.